Hello everyone, welcome back to our channel. Today we have an exciting topic to dive into.
All right, let's talk about something that every single trader knows and probably hates. We're going to look at that moment of pure panic. When a perfect pattern just falls apart, and learn how to turn it into a fantastic trading opportunity. Let's dive in. You've been there, right? You've drawn that beautiful, clean trend line. Price has been bouncing off it perfectly. You feel confident, you buy the dip expecting another bounce, and then, bam, it just snaps. The price crashes right through it. What do you even do now? Panic? Yep, you've just walked right into what we call the trendline trap. It's that sinking feeling in your stomach when a pattern you trusted completely just betrays you, leaves you on the wrong side of the trade. But what if I told you that trap was actually a signal in disguise? Okay, so first, let's break down exactly what this trap looks like. Because, understanding the problem is always the first step to finding the solution. This is where that classic advice to buy the dip can go so wrong. So picture this. You spot a crystal clear uptrend, held up by this beautiful diagonal support line. It holds once, it holds twice, you're feeling good. You decide to jump in on that third or fourth touch, thinking, this is it, another leg up. But instead of a bounce, you get a breakdown. Price just plummets, and now you and a whole lot of other hopeful buyers are totally trapped underwater. Now here's the really interesting part. At this exact moment of panic for most retail traders, for the big institutional players, for the smart money, the game isn't over. Not at all. In fact, for them, the real trade has just started. The whole board has just flipped. And that brings us to the core concept for today, the diagonal flip. We're going to learn how to master this powerful principle called a change in polarity. It's what lets us turn that broken trend line from a trap into a weapon. So, what on earth is this principle? Well, it's actually super simple. Change in polarity just means that a price level that was acting as a floor, holding the price up, once it breaks, it completely transforms and becomes a ceiling, pushing the price down. This is the perfect way to think about it. Imagine your trend line is a glass floor. As long as you're standing on top of it, it's solid support. But if that floor shatters and you fall through, well, now when you look back up, that same line is a ceiling you can't get past. That's it. Support becomes resistance. The buyers who are defending that line are gone, and now sellers are in total control at that very same level. Okay, but hold on. Before you can trade this flip, you have to be absolutely sure that the original line was actually important. See, not all trend lines are created equal, which brings us to a super important non-negotiable rule. And that rule all comes down to one magic number: 3. For a trend line to be considered valid and worth trading with this strategy, the market has to have respected it at least 3 times. So why 3? Why is that third touch so critical? Well, think about it. The first point just gives you a place to start. The second point, well, that just lets you draw a line between 2 dots. Anyone can do that. It's that third touch, that third successful bounce. That's your proof. It confirms the market actually sees this diagonal line and respects it. Without that third touch, it's not a trend line. It's just a random line on your chart. So here's the main takeaway for this section, and it's absolutely crucial. The stronger the trend line was as support, the more powerful it's going to be when it flips to resistance. A weak floor makes for a weak ceiling, right? We are only interested in trading flips from really strong, validated trend lines. Okay, so we've found our valid trend line. We've seen it break. Now for the really fun part. How do we actually get in on this trade and make some money from the flip? So the price just smashes through the line. What's your first instinct? For a lot of people, that voice in your head is screaming, sell, sell now. You got to chase that momentum down, right? But is that the smart move? No way. Absolutely not. Selling right as it breaks is called chasing the price. And trust me, it's a low probability entry that's a great way to get stopped out. Professionals do not chase. They are patient. They let the trade come to them. And that means we wait for the pullback. Here is the exact 3-step sequence. Step 1. We need to see a nice, decisive candle close below the line. That confirms the break isn't fake. Step 2, we patiently wait for the price to rally back up and retest that broken line from underneath to give it a little kiss goodbye. And finally, step 3, We only pull the trigger and enter our short trade when we see a clear bearish rejection candle right at that line, something that shows us buyers tried to push through but failed, confirming that sellers are now in charge. Look, a killer entry is totally worthless without solid risk management. So let's talk about the most important part, where to put your stop loss to protect yourself, and where to take your profits. Your stop loss, it's simple and it's logical. It goes just a little bit above that new resistance trend line we've been watching. Why? Because if the price manages to break back above it, our entire trade idea is wrong. The flip failed, and we want to be out of that trade immediately. And for our profit targets, we just look to the left on our chart and we aim for the previous major swing lows that were made on the way up. I love this quote because it just sums up the whole idea perfectly. It's a complete mindset shift. The exact moment that used to make you frustrated and lose money is now the signal that a brand new, high-probability opportunity is right in front of you. So let's boil this entire strategy down into a simple 3-step mantra you can take with you. 1. Watch for the break of a valid trend line. 2. Wait for the retest of that line from below. And 3. Short the flip when you get bearish confirmation. That's the whole playbook right there. Now, this core principle, support flipping to resistance, it is an absolute cornerstone of trading. And it doesn't just work on trend lines, it's everywhere. So the question I'm going to leave you with is this. What other chart patterns out there are really just a change in polarity in disguise? Think about it.
இந்த வீடியோ உங்களுக்கு பிடிச்சிருந்ததுன்னா லைக் பண்ணுங்க, ஷேர் பண்ணுங்க, சப்ஸ்கிரைப் பண்ணுங்க. Thank you for watching.